Hello, promoted markets. This is Ahuro with the global economic outlook in the week ahead, which is going to be the 47th week of 2024. Yeah, it's 47, so close to be the 52nd week and to close this year. Anyway, let's get into business and let's try to end this year with more profit and more benefits. As always, let's get started with the review of the past week, and then we can check the calendar ahead and see what we are going to have in the week ahead. Last week in the economic calendar, it wasn't such a huge or a busy week, but we had too many other data, including Mr. Trump's, President-elect Trump's new candidates. I mean, the candidates for his new governments and for administrations, even for the new administration that he had, the Doge. Generally, these news affected the market. At the same time, we had many speeches from the central bank speakers. They also affected the market. However, let's get to economic calendar as well. In the United States, focus was mostly was on Wednesday and Thursday inflation data. Inflation was not. We didn't have any surprise in the inflation at the first stage, but it was just a first glance. But if you go further, you say that you can see that yes, we didn't have a surprise, but inflation increased. Inflation by 0.2%, and core inflation by 0.3%, which means that the headline inflation increased from 2.4% to 2.6% annually, and core inflation was steady at 3.3%. That means that the inflation numbers didn't have a surprise, but at the same time, they showed that we will face too much more challenges to make inflation going further lower or slower, to have a slower inflation. Generally, the inflation data, they were sticky. We can say that we have a sticky inflation, especially with the Thursday's PPI numbers. PPI increased by 0.2% in October, after 0.1% increase in September. We know that in September, the initial number was 0%, was flat inflation, but after revision, we said we had a 0.1% inflation growing in September. So generally, the data that we had, especially with initial jobless claims, which fell to 217,000, that labor market seems like a crazy. I mean, look at that. Look at this number. Initial jobless claim 200,000, 217,000. This just, we can say just only. And continuing jobless claims, 1,837,000 watts. That's something surprise. I mean, that was a real surprise actually. If we want to look after the surprise, that's a surprise by somehow in this economic condition that everyone talking about the huge and future the bad economic condition, which is really is not a good, but at the same time the labor market is fine. With this data and next NFP numbers, I don't think that we should expect more than 4.1% unemployment rate. Anyway, the numbers that we had, especially if you go further on Friday's retail sales, also the retail sales increased up 0.4%. Yes, we had slower 0.4%. It was better than expectation, but remember, retail sales decreased. It was slower than previous 0.8%. So generally, the retail sales is getting weaker. That means that, right, the thing is that if we go to further to more detailed data and numbers, we can say in this way, we can explain in this way that savings are getting more, but the people are not going to spend from their savings. Right now, the people, they are spending from their credit cards. So especially with getting closer to the new year, and the people are more excited to buy, to have more spending for the new year and get things more, to buy more stuff and stuff like that. Generally, but still, with this all huge, not a huge, with this all happiness and a new year and stuff like that, which we should have more sales. We have only 0.4% sale in October. That's not a good number. Yeah, we do still have more than 2 months to the new year in October, but it doesn't mean that it shouldn't be affected. Usually in October, in November, in December, you're having a better retail sales. So generally, with the retail sales at 0.4% was in a monthly scale, was somehow disappointing number. We can say it was a disappointing number. But industrial production and other data, they were somehow fine. better than previous months. Generally, we can say that if conclude all together, put all the data together, including labor market data, including inflation, including retention, including industrial production, we can say that last week was not bad week for United States. That means that with the inflation numbers now, so that's why the central bank right now we have more than 38% chance for not cutting the rate. Still, we have 38%, more than 38% the chance of holding the current rate, and only 60, almost 2% for 25 basis points rate cut. That was the results of these numbers that we had. In other places in Europe, we didn't have much data, but still those data that we had, they were disappointing. GDP increased 0.4% quarterly in the third quarter, and 0.9% in annually. Again, in the third quarter, they were in line with expectations. No surprise. But if you go to the ZE economic surveys, the sentiments and economic sentiment, both of them, the economic sentiment and current condition, both of them, they missed expectations, which means that in Eurozone, the economic expectations from the businesses and from the consumers is getting worse and worse, which means we are not still so happy about the future of the economy. We are not so bright and positive and optimistic about the future of the economy in Eurozone. We should think about the euro. That too many people on analysts are talking about that the weaker euro against US dollar. I mean, usually we had one point each. I mean, euro 1 point some US dollar, but now sounds like that we're going to have stronger US dollar compared to euro. So that's what the people are thinking. That's what so many analysts are talking about. There is some whispers about that. We should be careful about these numbers. Next week, we will have more data. We can talk about that. But right now, these numbers that we had last week, they show that the economy in Eurozone is getting worse. In United Kingdom, unemployment rose to 4.3% from 4%. That's while the average earnings increased to 4.3%, following the 3.9% in September. That in August, in the 4.3% in September. Generally, the labor data was not positive. Higher incomes, higher payments, but more unemployed people. That's why with the other data that we had last week, we can say that the British economy is getting worse, especially with the new government that they had, the Labour parties, with the Labour Party with too many bonuses that they're going to have to the consumers. Means that the inflation will be, we're going to have the inflation again in danger in one hand. In other hand, the more taxes from the businesses, they're going to put the businesses under pressure. So that's why we are not so happy about the future of the UK economy. So more probably we will have more challenges in the United Kingdom economy. That's why we are expecting to see pressures on British pound against its price, especially against US dollar. In other places in China, finally, we can see some lines of positive effect of the lately stimulus and the rate cut that we had in China. That means that the Chinese economy is getting slightly move forward after after falling ground in the last months. Generally, the data from the China last week were positive, especially industrial, especially with the. Generally, the industrial production was fine. Fixed asset investment was steady, while so many people, they were thinking to see worse numbers at 3.4%. GDP, generally, I say the generally data, there's other data from the China. Generally, data from China were not, they were not negative. They were not so bad. Yeah, this is what we had the last week. In a week ahead, we will have too many data to watch. That's going to be a busy week with the economic data. In the economic calendar, we're going to have a busy week. In the United States, focus will be on the housing market. Tuesday, we're going to have the housing starts and building permits. Both of them, housing start and building permits, we are waiting for negative data. Then later on Thursday, we will have existing home sales. We're going to see a little bit, maybe 0.1% increase in the sales, but still, maybe it's gonna be maybe it will be a little bit better than the previous month. But after, because last month we saw 0.1% fall in the sales, maybe we can see a little bit better than previous month, better number than previous month. But housing sales, new house sales, gonna be worse still and continuing. We can see the more pressure on the housing market, still continuing the pressure on the housing market. Uh, uh, More than that, we will have US leading index. US leading index on Thursday also expected to see 0.3 to 0.4% fall. And yeah, that's the most data that we're going to have from in the economic calendar we are going to have from the United States. But United States will have mostly should be in the US economy, we should mostly focus on speeches, the speakers, and the changes in the new government and the president-elect Mr. Trump. Well, we have to see who's he's going to select as a new administrators. In Europe, PMI numbers on Thursday will be on the focus, but before that, on Tuesday, we're going to have inflation numbers. We are not going to see surprise in inflation number, most probably annually at 2.7% for the core inflation and the headline inflation at 2%. We're going to probably see these numbers to be repeated. We are not going to have a surprise in inflation number, but on Thursday, Friday. On Friday, when we are going to have the PMI numbers, we are expecting to see weaker than expected, both for the service and for manufacturing PMIs. That means that the central bank here isn't going to continue its rates cut, 25 basis point rates cut. With the negative data, with the rates cut, generally we are expecting to see still the weaker euro. That's what I was talking about. We're going to have, maybe we should have a little bit correction before next fall, but generally the euro still will be under pressure, and maybe we're going to lose its stability against US dollar, and we're going to see the weaker euro against US dollar. In other places, in United Kingdom, we're going to have the inflation numbers in retail sales. Inflation number is going to publish on Tuesday, right, or Wednesday. Inflation numbers in UK going to publish on Wednesday. The Wednesday inflation number in United Kingdom also is expected to stay around 1.7%. For headline inflation, between 1.7% and 2%. We are not going to see the surprise in inflation, but not lower than 1.7%. But in other places, the CPI, the PMI, and other data from United Kingdom that we're expecting to see, including the retail sales on Friday, we are expecting to see weaker than previous month compared to the previous month. We are expecting weaker numbers, which means that the British Central Bank can continue its rate cut by 25 basis points in next meeting. But there is a but we have to watch. The Labour Party's new budget that the Labour Party had going to continue to put more, to create more inflation. And this Labour Party, this budget is going to be really very dangerous for the British economy. That's why we are not any positive. We don't have any positive idea about the British economy in 2025. We have to talk about that later. I have to write about the 2025 economic outlook. We will talk about that in that article. Generally, we are not positive too much about the British economy. So pressure on the pound is expected to be seen. In United States, you talked about the United States. I have to talk about the initial jobless claims as well. We are expecting to see it again in initial jobless claims around same numbers in the United States. Generally, the data, they're going to be positive and continue the 25 basis point rate cut in December. We are not about any surprise in U.S. economy, unless if we see something special in the speeches. In other places, Eurozone, we talked British, we talked in Canada also, we're going to have inflation numbers, which is going to be published on Tuesday. Canadian inflation core inflation was flat, and in annual states, on the annual scale, But on the monthly scale, the core inflation fell by 0.4% previous month. This month, we are expecting to see 0% on a flat inflation numbers, which means that the annual inflation of on Canadian inflation should probably increase to 0.1 or 0.2%. But the headline inflation also should support. The headline inflation is around. Sorry, I just like the headline inflation fell by 0.4% last month. And the headline not the core inflation. The headline inflation fell by 0.4% last month, which means that the core inflation was flat. Sorry, let me just like correct it. The core inflation was flat last month in the monthly scale, which in the annual scale fell, bringing it lower to 1.6%. This month, we're expecting for October, we're expecting to see 0.1% for core inflation increase, and CPI also, the headline inflation also supposed to increase by 0.1%. So both of them we're expecting to see slightly higher inflation in Canada, which means next meeting in Canadian Central Bank, maybe we should see pause in rate cut policy that we have. So we have to see more numbers from the Canada, but this is generally we are expecting to see that the slightly higher numbers on the inflation in Canada. Dollar places, that's right. That's it. And let's go to the chart and see what we are expecting from the chart. Sorry, just for this 5 second, my mind went somewhere else and I just mixed the numbers. Okay, this is the chart. As for US dollar chart, the dollar chart shows that the US dollar index already facing with the lower highs in technically after reaching around 107 mark. Now we are expecting to see some correction next week, especially with the weaker economic data that we're expecting. So most probably we can see the US dollar index to see more correction. Mostly we are expecting around 105.50 as the next target for US dollar index this week with the weaker economic data, with the expectation of 25 basis point. Generally, the environment we are expected to see a little bit correction on the US dollar index. This is the same thing we are waiting for to see in stock market as well. For example, as S&P 500 is a bigger picture of the stock market in the United States, is expected to see more to continue its weakness that it had last week, especially under 5,870. If we see the S&P 500 under this area, next step will be 5,820 and then 5,775. These levels are what we are expecting to see next week. Generally, we are not positive about the stock market in the United States next week. As for gold, weaker US dollar that we are expecting pressure on the stock markets will increase the demand for the gold. So gold most probably after facing 2,540 can increase. Right now increase to 2,560 for the first, or then we can say the next target. We're expecting to see 2,600. If it can continue further, 2,650 can be the target for this end of the week or next week. But generally this week we are positive about the gold. But about the oil, there are last week we had a monthly OPEC report, we had a monthly IEA report and EIA report, short-term energy outlook of EIA. Generally, what we had last week, they were talking about the lower inventories in global inventories. But at the same time, we know that OPEC Plus also they continued their output cut for 2 million barrels a day till end of the January. For now, maybe they can continue further, but for now till end of the January. But at the same time, we had the data, we had the signs that the global economy, generally, the global economy is positive for 2025 and they can increase the demand. So the data, they are somehow they're covering each other after a strong year that we had 2023, 2024 so far, we had about 0.1 We didn't have it. Just like we can say that in 2024 we had almost a flat market. This flat market is expected to be continued. So around these levels, 67, 68, 69, 70, a little bit lower or a little bit higher, but around these levels we are expecting to end this year. But winter, we need more energy, we need more heat for heaters, for too many orders, for the new year, for travels. We need more fuel. So the energy is going to be hot still. So the oil still around $67, $70 expected to continue this week as well. So we have too many different different news and different factors that were going to affect the oil price, but generally they are somehow covering each other. So still the flat movement which we had in 2024 so far is going to be continued till end of the year. Oil, talked stock market, we talked gold, we talked about Bitcoin and other cryptocurrency market. Bitcoin technically is still positive, but we have very important or case supported 86,300. If we breach under 86,000, the next target going to be 76 or 77,000 around this level. But right now, technically, we are positive as long as it's trading around above 86,000. Falling under 86,000, we'll put the 76,000 US dollar as its next target. This is generally what we had and what we had the last week and what we're going to have next week, the week ahead. If you had any question, please do not hesitate to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.